Also welcome in the fundamental guest Avinash Gorakshakar, founder and head research of Avinash Mentor Research. Avinash, you heard the management. They have two launch pipelines for real estate business going forward. Order inflow guidance they have cut down a bit, but they are quite confident of winning more orders going forward. So how are you looking at this counter at the current valuations?
I think, Somit, if you look at the Q3 performance, I think, what the market was disappointed is that execution has been very weak. Both the revenue growth has been negative. The EBITDA is down by almost 30%. And I think, companies like Wascon definitely have a good order book. I think on the EPC side, on the real estate business, as the management said, one or two launches are expected. But I think what the market wants is very strong execution and some sort of a positive growth trajectory in both the top line and the profitability. So my sense is the stock will remain in a small range. I think any kind of re-rating will happen only once the Q4 numbers are out, and hopefully once the positive trajectory starts. We have been structurally positive on the stock. We have been telling our clients to get into this, but I think longer term, re-rating for this company could happen only when they do execute these projects in time, and I think that gets reflected in numbers. So I think valuations are definitely looking good and attractive, but I think the key question is execution. So we'll wait and watch, but Q4 should be a much better quarter. So I think longer term, over the next say 8 to 12 months, one could expect a decent risk reward, but it all depends on how well the EPC order book is executed, because any letdown there could obviously have an impact on their profitability.
Next, Avinash, you heard Jasmeet, quite a transforming business model here from paper to beer manufacturing. Have you tracked this counter? Any view here?
No, I think, Somit, this is a clear case where I think they've taken over a brewery, and I think this is going to be a B2B business. Typically, doing contract manufacturing for larger players like Kingfisher, Carlsberg. Typically, this gives them assured volumes and, definitely a reasonable margin to make. I would, look at the company once the complete, integrated merger happens and the financials get reflected. I think because, on the paper business side, again, it's a B2B business, but the brewery business is definitely promising. I think, over the next 1 or 2 quarters, once numbers come out, it would be interesting to watch what kind of margin expansion happens, despite the fact that they are in the B2B segment where margins are limited. But the growth opportunity in terms of volumes and catering to a large customer base is attractive. So I think definitely longer term, at least 6 to 12 months, the company should do well. But I think we'd like to wait for the next 1 or 2 quarters before we assume that numbers get better for FY27.
Right. Avinash, what is your view on this counter company into renewable and BESS projects, considering BESS, being a hot topic when it comes to power? Good order book, overall stand at around 13,268 crore. What should investors do today? Stock is up almost 7%.
No, I think, frankly, Varsha, the company should do well. I think a 13,000 crore order book gives them a very good kind of revenue visibility for the next 12 to 18 months. And I think the only point to note is that, the kind of margin pressure we saw on Q3, whether it will be controlled or whether margins would further come down in Q4. But I think structurally, the company seems to be on a strong wicket. The kind of orders they've got, the 1,700 crore order for the BESS project, I think definitely should add a little bit of sheen to the margins and obviously to the revenue growth. I think this quarter was a little bit of disappointment on the margin front. Markets were expecting a slightly better traction in profit. I think the PAT increased by just about 8%. But hopefully the Q4 should be good. And I think, from a medium-term perspective, one can definitely look at the stock maybe at a slightly lower level. We are positive on the stock, but with a 12 to 15-month time frame, I think within this space, the company has delivered good numbers. And I think FY27 should also be a lot better.
HPL Electric is another counter that remains in focus. The stock has been gaining for the second consecutive session. And in the last 2 sessions, it has gained nearly 16%. If you look at the volumes today, they are nearly 4 times its 20-day average. So what's buzzing here? Firstly, the Q3 numbers. The company's revenue were up 21%, while EBITDA was up 29%. So clear margin expansion is something that we have seen in the Q3 compared to last year. Now, this growth was strong largely on the back of increase in meter deliveries. Now, meter deliveries increased by nearly 25% on a sequential basis following a weak or a flat first half of this financial year. So which means that for the first half, the deliveries were quite weak, and in Q3 it has picked up and is expected to remain so even going forward. Now, if you look at the order book, it stands at close to 3,000 crore rupees, which gives us a strong revenue visibility for the company. And as I was mentioning, that the fourth quarter is also expected to be strong. In fact, management has said that the fourth quarter would be one of the strongest quarter in this financial year for the company. And for FY27, the company is eyeing a 25% growth on top line front. They're expecting smart water meters to be launched in the second half of FY27. So that will also start contributing to the top line. And they also say that the recent free trade agreements with UK and Europe will also boost exports going forward for the company. Now, if you look at the consumer and the industrial segment of the company, the switchgear segment grew 33%, wires and cable grew by nearly 60%. Obviously, the base is low here, but 60% growth is quite encouraging given the fact that there is still competition in this segment. And the company has also increased their reach to around 900 authorized dealers and 85,000 retailers. And going forward, there's also a product expansion that could come in, and they're actively evaluating a move into higher voltage cables, and they're expecting some progression to happen over the next 3 to 5 years. So still a long way to go for that, but the current businesses are doing quite good for HPL Electric, and that is the reason why the stock has been gaining for the last couple of sessions. Any view on this, Avinash? You must have tracked this counter, strong growth plans as well going forward. 25% growth is seen for FY27.
No, I think Swamit, company should do well. I think first of all, as you rightly mentioned, they have a large order book of 3,000 crores, and typically the fourth quarter is something which is supposed to be a very strong quarter for them. Last year in the fourth quarter, they made a PAT of 37 crores. So I think what the management is saying is absolutely right. Fourth quarter is going to be extremely strong, and I think last year they made a PAT of roughly about 80 crores plus. So this year should be a good year. I think the third quarter numbers are a clear indicative, of the number kind of trend expected in quarter four. I would say that once the market cools down and maybe you get an opportunity to buy the share at a slightly lower level, it could be a good opportunity in the mid cap space.
Right, got that view. Well, thank you so much, Avinash, for joining this conversation. Always pleasure to have you. Thank you so much.